So, Jeff, while sentiment may be up on previous years, there's still no denying these are tough times. And if we're honest, shouldn't we be seeing more companies being forced to restructure by their lenders?
It's a great question. I think the sort of term forced is a bit difficult. I think it's really for all of the stakeholders to realize that there's a huge benefit on just taking a really clinical look at one's position, one's balance sheet, operations, and coming to a collective view that something needs to be done, and something needs to be done that's a lasting solution. What we saw is several years ago, and rightfully so, it's quite normal in the cycle. There was a lot of resets of covenants in terms of extending sort of maturities and things to give a little bit more breathing space to the operators. That's fine if it's a very short cycle, but this is a very prolonged cycle, and you really need to come to more of a permanent solution. So it takes all parties to sit down and say, okay, let's try to resolve this and go through a lasting restructuring.
Is it fair to say that private equity interests remain interested, but they've been spooked by the market?
I think that's a fairly good question. I think a couple factors. A lot of the private equity players that are interested in it now, they've had experiences in the sector, the broader marine sector. Some of them were quite successful, some of them were not, with the downturn of the shipping cycle. You also do see as a lot of private equity players that were in the, let's say, the oil field services or the offshore space, that may have gotten out of their investments 10, 15 years ago are now looking for a good opportunity. They feel there's an opportunity, that levels of distress are there, that asset values and asset prices are sort of lower, that it'd be a good time to enter back in. But they're definitely being extremely cautious on it. A lot of due diligence and really looking for the right fit, not just getting in at any cost.
You shared a panel with John Rind of the Tidewater Gulfmark. How is it that Tidewater and Gulfmark seem to have got their merger right and others have struggled?
Well, I think it's a great issue, and John, it was great following John's presentation, because I suspected he might have peeked at mine sort of the night before, but he didn't. But a lot of the points, I think it's really addressing sort of the key pinnacles. Fundamental issue is clean balance sheet, and really I think he made the comment around, our biggest asset, one of our biggest assets is financial strength, and that's very true. It allows you to do things, it allows you to get more access to the market. The other thing too is being very sort of clinical and, let's say, dispassionate about assets, and really saying is what's the, for our strategy, what's the right mix of assets, and making the tough decisions to scrap assets and get the business. And then finally, too, very successful bringing the company in, being sort of very sort of timely in terms of working on really integrating the companies. The worst thing to do is to consolidate, come together, and let each of the businesses sort of continue on their own. So it's really essential, and those sort of three things are really put them on a nice strong platform for the future.
Now, of course, American companies have, and I use the term advisedly, the luxury of Chapter 11. What do you think the outlook is for the larger European OSV owners who perhaps don't have that luxury?
Well, just slight correction, actually, a lot of people have access to Chapter 11. It's a function of putting a domain in the US, so there's been Asian companies, several of which we've been involved in, where they're Asian entities, but they do have activities in the US, and they're able to enjoy sort of the benefits of Chapter 11. Having said that, there's also other regimes, there's other sort of strict regimes or schemes of arrangement in the UK. There's a new regime being developed in Singapore. I think I alluded during my presentation, there's actually some schemes. So for example, Ocean Rig did a restructuring in the Caribbean. So there are different alternatives. I think the key thing is to make sure all the stakeholders are aligned and understand the value of that process. Where it really gets difficult is if you have a huge divergence of views on that. And so any type of the process allows you to sort of smoothly lose to resolution. If there's conflict in that, it gets quite timely, quite costly, and extremely painful.
At the session's conclusion, I rather cheekily asked you to invest a hypothetical $100 million, and I asked you, where would you invest that in terms of geography and segments?
Right. So I did check my bank account. The money hasn't arrived yet, so can you please check with your bank, first of all? But I think I sort of three sort of three areas, and I look at it from a pure asset standpoint. Do like bespoke assets, like assets that are quite unique. Also that kind of, let's say, focus on, think there's opportunities in the subsea sector, and also some of the sectors where there's a heavy repair and maintenance component or very short-term capex cycles, 2-3 year recovery opposed to 10, 20 years. That's the first thing. From a company standpoint, if you do want to go in and sort of invest in company like sort of technology and also like more of the asset light companies that have really been beaten up with sort of the whole downturn, that have some good solutions in the sector. And then the third one was cheekily, I sort of answered a long-term investment. It's the big tip out there. It's called ELD, Offshore, and that's the first letters of my three daughters' names, Emma, Lily, and Daisy, who I've invested heavily in their education to take care of me in my old age. So.
Jeff, we have previously met at our Singapore Offshore Support Journal Conference. I think this is the first time you've been to the annual Offshore Support Journal Conference. What are your impressions?
Oh, I thought it was really, and I sort of did come up to you yesterday, I think it was really good. A very good representation of operators, service providers, lenders, so those kind of key sort of players in the offshore sector. Very realistic sort of views. It's not, people I think were quite sort of honest on what the challenges are. Feel like they can handle some of them are more difficult. So I think that was quite refreshing, that people are very, very realistic on it. There's no silver bullet, there's no right answer, but I think very much there's a very common theme that things will improve, but we need to be much more sort of proactive, and how can we sort of work together as a group on that. So I really enjoyed it. I think it's been great. I'd love an invite next year too.
Jeff, you're most welcome.
Thank you very much. Thanks. Cheers.